Hi, my name is Sumit Agrawal and I manage the Large Cap Fund at the Bandhan Mutual Fund. Today I would like to talk a bit about the fund strategy, how do we manage the strategy, and what is our brief outlook about the investment strategy going forward. So if you look at the Bandhan Large Cap Fund, we basically follow a time-tested investment framework of BMV, which is Business Management and Valuation. We tend to buy businesses which are scalable, which tend to grow faster than the market. We tend to buy companies which are run by management which have proven capabilities. Generally, these are strong execution experience. And finally, valuations, which is the V part of the BMV framework, which talks about buying companies at an acceptable and reasonable risk reward. When we combine all these three things together, I think we get a portfolio which is largely consisting of large cap companies and which gives you a better risk reward over experience for the investor. So therefore, in following this framework, there's one more thing which we follow, which is having a reasonable active share which ranges somewhere between 30 to 60%. Now, what an active share means is that we tend to have a portfolio which will differ roughly between 30 to 60% from the benchmark, which is BSE 100 in this case. What it does is it gives you an advantage of an active fund management style. It prevents you from hugging the benchmark to a large extent. And if your bottom-up ideas are doing well and your research is doing well and those stocks in the portfolio does well, the end investor experience is relatively better than the benchmark. That is what we try to deliver. Our experience so far following this strategy and an active share between 30 to 60% has delivered satisfactory results. Now let me talk a bit about the positioning of the fund in the current environment. As we speak, we see profit growth for most of the companies slightly slowing down, and we are coming out from a very strong mid and small cap cycle in the Indian economy. So from that perspective, in an economy which is likely slowing down, the fund is positioned very defensively. We are overweight on technology as a sector. We believe the rate cuts globally and followed by India will help this sector to get re-rate, and we see that investor positioning here is under-invested. So therefore, if we are a bit early here, that can help the fund. Other sectors where we are overweight are about FMCG and consumer services. That is again a space which has not done well in the past. So again, slightly ahead of the time, but that gives a defensive tilt to the portfolio. And last but not the least, we are also slight overweight on pharma and healthcare as a sector, which again is a defensive bet. So in a nutshell, I believe that having such kind of portfolio tilt in the current environment will help the fund. Obviously, we keep on evaluating our styles as and when we get new data points. But as of now, this is the strategy for the fund, and I think is quite relevant in the current macro environment. So this is the summary of the fund, and I wish you all a good experience with the fund. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.